Welcome back. Markets are lower this morning. Futures indicating a triple-digit decline at the start of trading. The Dow Industrial's down 286. The Nasdaq down 387. Remember, we have been in a melt-up now for the entire year, hitting record after record. But investors could be on edge this morning after caution from some top bank CEOs in Hong Kong. Goldman Sachs' David Solomon in Hong Kong warning of a possible 10 to 20% market correction to come. And Morgan Stanley CEO Ted Pick said that it could be a 10 to 15% correction as possible ahead. Meanwhile, Palantir keeps blowing the cover off the ball. The company's stock is down this morning after an incredible year. It topped analyst expectations with its latest quarter, revenue jumping 63%. It also raised its fourth quarter guidance to $4.4 billion. The stock at this is up 170% this year as the company increases selling its AI software to governments and companies. AMD, by the way, will report earnings after the bell tonight. We'll be talking about that one tomorrow. Joining me now is Mainstay Capital Management CEO, founder, and chief investment strategist, David Kudla, back with me. David, good to see you. Thank you so much for being here with $4.7 or more billion of client assets under management. How are you positioned right now?
Right now, we're positioned in the U.S. stock market, overweight AI stocks. That's where all the action is. Two-thirds of S&P 500 earnings are coming from the AI stocks. We've had a couple of deals announced this morning and a lot of deals with OpenAI over the past weeks that have been announced. And that infrastructure spend is really what is driving earnings, what's driving the economy, and the market cap of those companies. So AI stocks in the U.S., we like emerging markets, especially Asia, and then gold and silver for diversification.
You're right. There's been a massive wave of AI deals in the last few months. Amazon inked a $38 billion 7-year deal with OpenAI for the Nvidia chips to be used. Microsoft signed a $9.7 billion deal with Australian giant data center firm Iron to expand AI cloud capacity, secure access to the Nvidia chips, powered systems. As demand for Azure and AI services surge, I spoke with Nvidia CEO Jensen Huang on Sunday and asked him about all this money moving into AI and what is it going to look like? Where's the return? Watch this. Jensen, I want to get your take on all the money moving into the AI infrastructure build-out. How much are you expecting that to be, and will we see a return on investment in that money soon?
Artificial intelligence in the last year made some humongous breakthroughs. It is now effective, it's useful, it's generating really good results for users. It's impacting every single industry that we're observing. Everything from healthcare to, of course, enterprise computing, where we do work, and whether it's manufacturing, robotics, we're seeing breakthroughs in every industry. That platform shift is just beginning, and we're just seeing it so strong and accelerating because now fundamentally, finally, AI is delivering really great results. And it's the reason why we're seeing the fastest growing companies in the world.
You know, David, I'm sure he's right. I mean, at one point, he was at one of his conferences and he talked about $3 to $4 trillion in new money to come into this build-out. But look, Nvidia just recently hit $5 trillion in market value. How much do you have to grow to meet $5 trillion in market value? And are we ever going to see, or are we going to see a return on investment to all those trillions of dollars in this build-out? And when?
Well, you've got to grow a lot, and there's a lot being spent on AI. We're seeing forecasts that continue to get revised upward, as much as $700 billion next year, as much as $3 trillion over the next 3 years invested in AI. Right. Some of the times the question is, are we investing enough? But look, AI is going to touch every industry, and it's going to transform society as we know it. I think there's real questions out there what the return will be. We're starting to see some of that already, and we're going to see more of it. But certainly that is the area where we're seeing the most growth in our economy and ultimately economies around the world.
When you invest in AI, David, do you also want to invest in energy? Because, look, they need power to fire up all of this. And I was just in the Permian Basin, and what I witnessed in the Permian Basin is we're actually selling natural gas at a loss. We have so much natural gas in this country, but we don't have the pipeline infrastructure in place to deliver that nat gas. And that is what fuels AI.
Yeah, one of the stocks we own, Constellation Energy, in full disclosure, has done extremely well this year and of late because of the energy needed for the AI build-out. So we're going to continue to see energy do well. We're seeing utilities ETFs. People look at utilities ETFs and how well they've done this year. It's a function of the energy needs for these AI data centers. It's just going to be massive. There's questions about the grid. Are we going to have to do more with nuclear? Where is all this energy going to come from that we need for the AI data centers? So certainly energy, even though oil has traded lower this past summer, we're going to see the needs for energy going forward, and they're going to be massive.
What's your take on the job cuts that we've seen? I want to get your thoughts on the macro story here. I mean, look, we know that AI is fueling economic growth, but it's also creating, abundancies and the need to cut down jobs. From tech to retail, companies have been laying off workers while restructuring, doubling down on automation. Layoff announcements up sharply this year. Let's look at it because nearly 950,000 job cuts announced through September, the highest year-to-date total since 2020. We're waiting on the October ADP number out tomorrow. Economists are expecting 28,000 private sector jobs added to the economy after companies actually cut 32,000 jobs in September, David. Your thoughts on the macro story and jobs?
Yeah, when we look across the economy and we look across market fundamentals, it's really about labor and labor being so soft. And we're seeing the job cuts continue to come in. It's indicative of this K-shaped economy. At the same time, there are job cuts announced at, say, Amazon, certainly with an AI. That's where a lot of the jobs are going to. But as we know, as we look further out, AI is going to impact jobs more and more. So it'll be interesting to see what some of these job reports look like in the out years. But we are seeing real softness in the labor market. But if we look at GDP in general, is being lifted by AI. We've got an accommodative Fed. They just cut. They've stopped QT, the quantitative tightening. We've got fiscal stimulus from OBBA, and the AI infrastructure spend. So this market and economy have a lot going for it, but we are seeing soft labor as one issue we have to watch very close.
It sounds like you're bullish for 2026. Would you buy stocks going into the new year? Right here?
I would buy stocks. You know, there's a lot of concern about valuations getting high. We're upwards of a 23 PE multiple on the S&P 500. But as I said, we've got this slow melt up. We've had no more than even with this pre-market sell-off this morning, no more than a 3% decline since April in the market. So it's expected we're going to have some pullbacks along the way. But we're looking for double-digit earnings growth for 2026. That's what it's about in the long term. So we're still constructive on stocks.
All right, good stuff. David, great to catch up. Thanks so much. David Kudla joining us.
Thank you, Maria.
A quick break.